Cbus manages over $26 billion in superannuation savings for members. Cbus offers a range of investment options for superannuation and income stream members. Often we hear the term asset allocation and its importance in relation to investments. In simple terms, asset allocation is a combination of asset classes that make up an investment option. With us here today is Tim Ridley, Cbus's Investment Strategy Manager, to talk us through how Cbus allocates members' money to a range of asset classes within Cbus's diversified investment options. Our focus in this interview is the growth Cbus MySuper investment option. So Tim, what's Cbus's general approach to designing investment options?
Daniela, Cbus has a wide range of investment options, each with a level of risk and potential return. Each investment option has an investment objective with two components. The first component is the return component. The second is the negative return frequency. For example, the growth option has a return component of inflation plus 3.5% over 10-year periods. The negative return frequency for the growth option is 3 years in every 20 years. Cbus invests across a wide range of asset classes and investment strategies with the aim of achieving the investment objectives for the investment options.
Tim, you've talked to us about the general approach to designing investment options. Can you tell us what asset classes the growth option invests in?
Daniela, the growth option is broadly diversified across a range of asset classes. It has exposure to higher risk asset classes like Australian shares and international shares, as well as to lower risk asset classes such as cash and fixed interest. The higher risk asset classes, which are commonly known as growth asset classes, tend to have higher return potential but also greater risk of loss. The lower risk asset classes, which are commonly known as defensive asset classes, are typically giving lower returns but also more stable returns. These asset classes are included in the portfolio to give some downside protection in the event that we've got an adverse investment environment. The proportion allocated to each asset class largely determines the risk and return outcomes for each of the investment options.
Tim, what is the asset allocation framework for the growth option?
Cbus's asset allocation framework has two main components for each option. Those components are the long-term strategic asset allocation and also the target portfolio. The long-term strategic asset allocation is designed with the intention of meeting the investment objective over the long term. The target portfolio incorporates Cbus's medium-term investment views. The target portfolio differs from the long-term strategic asset allocation with the intention of enhancing the performance of the investment option. For example, if we have a positive view on Australian shares, the growth option may have a higher weighting to that asset class versus the long-term strategic asset allocation.
Tim, what does the current target portfolio look like for the growth option?
Relative to the long-term strategic asset allocation, the growth option currently has moderately higher exposure to growth assets. This mainly reflects higher exposure to Australian shares and also international shares. The growth option currently has a lower exposure to purely defensive assets in aggregate, i.e. cash and fixed interest.
Tim, how has the growth option performed over the financial year to date?
Over the financial year ending 30 April 2014, the growth option has generated a return around 12%. This has reflected positive contributions from all asset classes, particularly strong contributions from Australian shares and international shares. While the performance of the growth option over the year to date has been favourable, we continue to focus on achieving the investment objective, which is measured over 10-year periods.
Thanks, Tim.